Before we start, just understand this is not a signal service. Everything you see here is for educational purposes only. Trading involves risk, and the goal here is not to follow trades, it's to learn the process behind them.
Good morning, and welcome to I'm the Trader Capital live trading floor. First and foremost, all glory to the Most High God. Let's bow our heads for a quick prayer. All right, our Heavenly Father, we thank you for your grace and your mercy. We thank you for another opportunity to try again to learn and grow in these markets. Father, we ask that your will be done today as it is in heaven. Father, we ask that you give us the heart of a giver and make us a lover of our neighbor. Please let me not lead anyone that listens to me astray, but use me as a vessel to bring your children back onto you. In Jesus' mighty name that we pray. Amen. Can the church say amen? Amen. Let's begin. Before we jump into the charts, I just want to say this. There was a time I used to sit down at the charts with no real plan, jumping between strategies, losing, blowing accounts, second guessing every entry, and honestly just hoping that the trade would work. And that's where most traders are today, not because they're not capable, but because they don't have a structured process. The biggest pitfalls that causes traders to fail is that they have no knowledge on money, they don't know how to lose, they don't know how the markets operate, and they don't have a winning model. 90% of traders fail, all 90% are plagued with one or more of these pitfalls. Today, I'm going to show you the 3 pillars that every trader must have in their trading to survive and thrive in the financial markets, so you can join the 10% who succeed and fast track your way to the top 1% of the wealthiest people on this planet. It's called the 10% to 1% club. Let's go. Woo! But before we dive deep into the 3 core pillars, when you step into this arena, on this battlefield, you must first have 2 crucial realizations. Realization number 1, trading is war. This is not a get rich quick scheme. This is the hardest thing that you'll ever do in your life. Realization number 2, all traders are money managers. As a trader, your ability to manage money is vital to your survival in this industry and in life as we know it. Most traders think that success in the markets comes from finding the perfect strategy or catching the biggest moves. But the reality is, trading success is built on 3 core pillars. First is money and mindset. This is the foundation of success. Then is risk management. This is the holy grail of trading. This is what will keep you in the game long after everybody else has quit. And lastly, we have trading edge. This is where all traders start. I know this because this is where I started. That's why in today's session, we're going to hone in on your trading edge. Now, everything that we do here is built around one thing, and that is confidence in your trading edge. And at I'm the Trader Capital, our confidence comes from 3 things. First, it comes from understanding how the market actually operates. Not what social media says, but how money truly moves. Second is having one trader model. One model with IPDA signatures that we trust and execute on a consistent basis. Third is having a plan and a process, because without a plan and a process, you're just reacting to price and you're winging it each and every time. And this right here, this session, this is where we focus on the 3rd piece, the process. So many people lose confidence in trading and in life because they simply don't have a plan. There's no process they're following. There's no procedures and protocols that they're abiding by. They literally are just winging it. And they wonder why they can't get consistent. They wonder why there's ups and downs in their equity curves. They literally can't figure it out. The uncertainty of not knowing exactly what you're doing, how you're doing it, why and when you're doing it in the market will cause you to fail in trading. Confidence and certainty are key if you want to be successful in trading, and it's your responsibility as the trader, as the analyst, as the fund manager. It's your responsibility to attain that confidence, not only in your model, but also in your processes. So what I want to do right now real quickly is I want to share with you the process that we teach all our analysts at I'm the Trader Capital, and then we'll see that process live in action. This is the 3-step trading process. Step 1, condition. This is where we determine our bias. Before we even think about entering a trade, we need to know the market program. Are we in a buy program or sell program? This is where the market shows its hand. Then we have step 2, stage. This is what sets up your trade and what does your trade look like. There are 2 types of trades, retracement setups and continuation setup. Then we have step 3, execution. This is how you're going to enter, manage, and close the trade. At Am the Trader Capital, we have 4 entry criteria before executing. I'm not here to force trades. I'm here to execute my plan step by step in real time. All right, let's get into the live trading flow. Now, as you're watching, don't just look for entries. Pay attention to the process behind the entries, because this is what will get you into the 10% of traders who succeed. And if you want to go further to the 1%, well, that's where we break down all 3 pillars inside of the program. I used to think that winning trades built confidence, but it's not the wins. It's knowing exactly what you're doing, when you're doing it, how you're doing it, and why you're doing it before, during, and after each trade. And that is what we're building here. Let's begin with our daily trading processes. Weekly target going to this week is 3% as always, all right? Mental check-in, feeling generally okay. Excited to see what price action has in store for us today. Excited to continue to grow, all right? Get 1% better today and this week all together, okay? Coming off a long weekend, all right? So, yeah. Missed these candlesticks, all right? Yeah, let's get it pushing. I accept any risk that comes with trading today. I understand that trading comes with real risk and that losing is part of the battle. News is Tuesday, May 26th. All right. Even though, right, we have news today. All right, we have medium impact news and that came out at 9. All right, high impact news coming out at 10. Even though we have news today, all right, my procedures and protocol states that a day after a holiday, all right, I need to sit still and just let the market do its thing. So we won't be taking any, even though it's still demo, right? Demo trades today. Well, no funded account trades today, okay, but we will be demoing if we see anything, okay? So no funded account trading today because it's technically not an optimal day to take a trade, even though, right, we have news today and all we need is medium to high impact news for it to be an optimal day. It's a day following a holiday, all right, so we sit still, okay? So we'll be sitting still today. Doesn't mean that we can't tape read or demo trade, okay? So do with that information what you do with that, right? Risk going into today, not that we'll be taking any trades, but if we do, it's still the same, right? It's going to be 0.25 of account size, and we have a max of 0.75 on a day. All right, weekly program hasn't been established yet, all right? I need to see Tuesday's range, well, today's range finish first, and then we'll determine which side gets taken on today's range, right? Because Monday was a holiday, so it doesn't really count. All right, we don't count that price action, so we're waiting on today's price action to determine our weekly program, okay? All right, let's go ahead and adjust our higher time frame ranges and proceed with our daily processes, okay, which is review previous day, and then we'll get into a 3-step process for the day. I missed you though. I missed ya. It was a long weekend. It was a long weekend. I did backtest this weekend. Confirmed a lot of things, all right, that I've been seeing in the chart. So pretty much excited to walk it forward. All right, previous days I think I already did this last night before I shut this computer down. We're good here. We're good on 20-day. We're good on the week. Previous weeks, high and low. Yes, we're good on that. As you can see, we dropped into this 4-hour inefficiency back onto previous week's high, which is supporting price higher right now, okay? So from what I can see in a higher time frame, right, we're in a buy program, obviously, based on what price has been doing and what we're going. We came into this weekly inefficiency, just dipped into stayed in the upper portion, all right? This is signs of strength that price wants to continue higher. We even gapped up. So this bad boy wants to keep going higher. But anyway, let's digress and progress. Previous day would be what, Friday? Yeah. I guess it's kind of just combined Monday and Tuesday into that one. Is what it is. Friday. Let's see how Friday finished. Excuse me. Goddamn. So this was the trade you were in the morning. Okay. Lunch session pretty much didn't have anything, but PM session most definitely had a few setups in here. God damn. We had this retracement setup based on dealing range buy side here. Right, brought us back inside of the range. We had a couple re-entries in here. 250 macro. This was 150 macro. 250 macro. We also got a setup as well. It was a continuation sell. All right, using open range sell side for the PM session. And yeah, beautiful stuff. Lovely jubbly. Anyway, let's get into today. Ooh. Ooh. Different week, same processes, all right? Nothing changes, nothing changes. A fear of mine, right? A fear that I always have these days is that I'll wake up one day and forget what I'm doing in these charts, right? And forget what I'm looking for. But then I was graciously reminded, right, that I have live recordings of these, right, that I can go back and watch and see exactly what I do, right? So no longer need to have that fear, you know what I mean? I guess the fear would be my mental faculties, right, not being able to comprehend what I'm doing in these markets anymore, you know, which will be a sad day, all right? But if that's his will, that's his will. Anyway, step one, condition determine bias. All right, in order to do that, you must first identify your dealing range. All right, like I said all the time, there's a different ways, all right, different dealing ranges that you can use, all right, to determine your condition. It just depends on what kind of trader that you are, all right. Hold on, that's not it. Parallel line, parallel channel. It just depends on what kind of trader you want to be, really and truly. All right. For me, I'm a day trader, short-term trader. I wouldn't even say short-term, just a day trader, to be honest, because I'm out on the day. Short-term, at least you hold for at least a day or two, right? So we got a dealing range established. Above dealing range, all right, we have PM session. Well, we didn't really count. What was it? We have AM session from Monday. Not really a factor, or really, but and we have all-time highs above price as well. Okay, which is Monday's dealing range high. Okay. Monday's price action is really null and void in terms of if I'm using it for anything, okay? Because it was a half day, it was a bank holiday. Below dealing range, we have Friday's AM session sell side. Let me get that. And we're kicking off. Ding, 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 ding. Taking dealing range buy side, all right? Establishing our condition really quickly today, all right? As a buy program. Open range gap is below price, okay? So we gapped up. So we have a premium gap up, decent size open range gap. It's a big ass open range gap. Excited to see what price action has in store for us today. Should be good. With that gap there, we should see some good stuff here. Let's go ahead and get that demo. Oh, and today's actually the day one of being able to enter on the 15-second actually. So it's good. I'm happy that it's gonna be on the demo. All right, so I can build that, you know, additional confidence and not feel no type of way, you know what I'm saying? So we will be paper trading today. All all right? Because even though it's an optimal day, because we have high and medium impact news, it's coming off a day after a holiday, okay? And my precision protocol says to sit still. So that's what we'll be doing. Alright, so we are in buy program, all right? How can we be a buyer of this market today? It doesn't mean that we can't sell, right? We understand that once one side of the dealing range is taken, okay, price can only do two things. It can retrace to continue, which is what we always anticipate, retrace into a discount to continue higher, or it can retrace to reverse and take the other side of dealing range, which then that action will flip our buyers from buys to sell, okay? So we're either waiting for a retracement setup or we're waiting for a continuation setup. It's that simple. Don't complicate it, don't complicate it, don't do it. There's only two types of trades, right? You're either getting into a continuation or you're taking a retracement setup. And it is Trading Edge Tuesday, where we build confidence in your trading edge. We do that every session, all right? But on Tuesday specifically, we dive deeper into building confidence in your trading edge, okay? This will be a lovely V shape and trade out on here. It's Trading Edge a Tuesday. I'm watching how we gravitate towards consequent encroachment of open range gap, which is also below daily range low. So let's see here. 15 seconds already got started kicking off already, heading to the downside. A V shape set up there for retracement. Bear me, please. I can no longer see the thing on here, you know, because when I had it on here, the chatting now. Where did it go? That's wild, no? We can't see it. That was nice. From here even to here. That was nice. Stayed in the lower portion of first business to fair value gap on this time frame. Okay. Very, very nice. Very nice. All right, I'm the trader capital. All right. Confidence in our trading edge comes from three things, right? It comes from first understanding how the markets actually operate, all right? How these candlesticks move, why they move, okay? It comes from second having one trading model, right? With IPTA signatures that we trust and we execute on a consistent basis, all right? One model that we've collected data on, all right, we've back tested, we've taped read, we've forward tested, we've demoed, okay, we've seen the consistency in that model, all right, and we trust that model because we've seen it pan out so many times, right? We've had enough data using that model, all right. And thirdly, having a plan and a process, okay? Because without a plan and a process, all right, you're simply just winging it and you're reacting to price, all right? Successful trading is boring, all right? You're doing the same thing over and over. There's no excitement, all right? Nothing changes. You know what you're looking for when you step in front of these charts, all right? That's how you eliminate fear and greed, all right? And the emotions that cause 90% of traders to fail. Remember, every time you're here, you're trying to avoid the 4 pitfalls that causes 90% of traders to fail, right? No knowledge on money, all right, which we get you right on Mondays and Fridays, right? They don't know the concept of money, like what it is, who behind money, all right, and the 3 hows, right, that we talk about, okay? They don't know anything about money, right? They don't know how to lose, all right? Because the only thing promised to us that we're going to take losses in this game, right? That's the only thing promised to us, right? Each trader is going to experience a losing trade. Each trader is going to experience a series of losing trade, all right? It's about having a plan and procedure in place to weather losing trades, because that's the only thing promised to you here, right? They don't have a winning model, all right? They don't have a winning model, which we're talking about today, all right? And they don't. Ah! Damn, Alex, you forgot the 4 pitfalls, and didn't you? All right. They don't know about money, don't know how to lose, don't have a winning model. Wow. Hold on. I'm gonna get this shit. And they don't know how the markets operate. Exactly what we're talking about today. How can I forget it? They don't know how the markets operate. Alright. Those are the 4 pitfalls that we're trying to avoid. Alright, falling trapped into, okay? What the hell? Da 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 da. Hold on. Hold on. I'm not sure if this is ready for consumption. It's not ready for consumption, really and truly. May not think so, because we're not ready. But you know what? we can't just leave it on that and just talk individually about it. You know what I mean? You know what I'm talking about? Bear with me. Da 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 da. Yeah, this will work. Let's go. But me can't see it though. Where did it go? Oh. You see that? You see that? Un momento, por favor. We're talking about trading edge and how to build confidence in your trading edge, all right? Da 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 da. Market structure shit, but nothing for me to do though. Nothing for me to do. Da 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 da. Da 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 da. Da 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 da. Easy, simple, dimple, simple, simple. Just like that, just like that. Rest of the day, breathe. Breathe. Right, so confidence in the trading edge, right, comes from understanding the market, right? How does it operate? How and why do these candlesticks do the things that they do, right? Because they're not doing it randomly. It's with a purpose, right? And there's a reason behind why it does what it does, okay? And it's doing it with a mission, right? It's been algorithmically driven, okay, to do these things, right? And if you know the who behind money, you understand why, right, these candlesticks do the things that they do, right? Everything is in order for you to see the bigger picture in terms of these candlesticks, okay? Right, the who behind money, right, we already established is the central banks, right? Money is their commodity, is their asset, they own it, they set the price of it, they control it, right? Just like if you had a restaurant, if you own the restaurant, right, who sets the price of the meals? The owner of the restaurant, right? Obviously there's going to be factors they base that price on, right? But they at the end of the day ultimately set the price of the goods, right? Because it's their restaurant. It's their asset. It's their commodity. You own it, right? So you set the price of it, okay? You control it to every minute degree, okay? And that's the same thing in the markets, right? It doesn't it's not any different, right? It's the same thing that happens here, right? These candlesticks, they are being controlled, all right, by the people that own it, right? By the people that own it. I own it. I own you, big guy. I own you. Even if you're not there, I own you. Buy my, I own you. I own you. Only if you watch my wife and kids, you get what I just did there. But if you don't, you don't. It is what it is. Keep it pushing. Alright, so how does the market operate? How does it operate? How do these candlesticks move? Why do they do the things that they do? Why did price stop specifically, right below equilibrium of the dealing range, right? Why did they just stop? As you can see, the bodies, the wicks do the damages, the bodies tell the story, right? Bodies are closing above, all right, consequent encroachment of this range here that we just identified, right? Time-based range, right? Time-based range that we identified, right? Came down into a discount. Bodies stop dead in its track above equilibrium of that range, right? Price is telling you, hey, I'm stopping right here. I'm not going any lower than equilibrium of this range here, right? This is enough. This is enough discount for me to then continue higher, okay? Why did it stop there, right? That's the question we're here to answer. Why? Why do these candlesticks do the things that they do, all right? All right, so market efficiency works for smart money, all right? I think we established who smart money was yesterday, last week, all right? Not for everyday traders, all right? Smart money are the central banks, right? The people behind the algorithm, all right? Okay, the smart money, that is smart money. This is a zero sum game, all right? For somebody to lose, somebody has to be winning. For me to win, somebody has to lose, all right? For you to win, somebody had to lose, okay? There's winners and losers in this game, all right? There's somebody that's always on the winning side, right? They're the ones behind the scenes that are, like the puppeteers. Controlling the game, you know what I mean? All right? That's smart money, okay? However, bear with me. Oh, don't do this to me. Right, so when it comes to understanding how these markets operate, right? Like we just talked about, market efficiency, all right? It works for smart money, right? They know what's happening. They know they're behind it, so they know when to jump on board and when not to jump on board, all right? It's not, these markets weren't made for the everyday trader, speculator, all right, people in here, okay? So there seems to be a disconnect between people's thought process, all right, about how the markets operate and the reality of the market, right? To understand these charts and how these candlesticks move, you have to first understand the market efficiency paradigm, all right? This was a game changer for me. Hold on, let me see if I can get you guys to see this market efficiency paradigm, because it doesn't make sense unless you see that shit, you know? Just add a blank one. Yeah, see that? Yeah, see that? This is the market efficiency paradigm, all right? 950 macro. Let's see what you got in store for us here today. Da 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 da. They take buy side above it there. So market structure shift down in here. Who would be interested on a supporting time frame? Actually, no, I won't. I need to see it post 950. So actually, I will not. Okay, this is the market efficiency paradigm, all right? This when ICT first, when I learned this first from ICT, right? It was a game changer for me. Is what actually opened my eyes to everything that's going on here, and it's just once you understand this, right? Once you understand the market efficiency paradigm, okay, is your understanding of these candlesticks it becomes clearer, becomes cleaner, and everything just makes sense. Like I said, it's a zero sum game, right? For me to win, somebody has to lose, all right? There's always somebody in here that's winning, all right? As traders, investors, and speculators, right? When we come into the markets, we're made to believe that we control price, all right? That is our buying and selling pressure, all right, that makes these candlesticks move up and down, and this is not true, okay? So we're made to believe that we are the huge circle right here that you see, that these people here, speculative, uninformed money, all right, willing or unwilling liquidity, we're the ones that move these candlesticks. It's our buying and selling pressure that makes these candlesticks go up, all right? Some of us have no idea of the smart money, this small group of people here that draw no attention to themselves, okay? They're really the ones behind price action, okay? And they're the ones that actually control what happens in these candlesticks, okay? Like I said, we have no idea of the entity smart money. Right? We have no idea that they even exist. Right? Some people, right? I didn't have any idea that they exist when I initially came into the financial markets, when I discovered trading and thought I was gonna make my riches here. You know, not that I'm not. I'm still gonna make my riches here. Right? It just wasn't in the way that I thought I was gonna make it when I first initially started. Okay. Da 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 da. Okay, but we have no idea that smart money even exists, right? But they are the liquidity provider, all right? You and me and everybody else, we are in this group. We are in the big circle right here of speculative uninformed money, okay? Right, to get to the side of smart money, all right, there has to be a paradigm shift in your thinking, okay? You have to understand that the markets are only efficient, all right, for the smart money. Oh, hold on. Is this below? What's the price here? 930. What's below here? 930.25. This is below 930.50. Da 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 da. We take buy side here, okay? I'll be interested in a continuation setup here. And we are on a continuation account on this paper trading. Yeah, buddy. 2 contracts. Hey, we in 1 contract Larry today, boy. Let's just confirm 330.50, 25, yep. If it gives it to me, I'll be interested. If not, that's fair enough. No love lost here. Bring this beer up a little bit. Right there. Thank you very much. If it tags me in, it tags me in. If it doesn't, it doesn't, right? It goes without me. That's okay too. high is over here, right? Yeah. Let's see if we get tagged in here. All right. Where was we? To get on the side of smart money, all right, there has to be a shift in your thinking. You have to understand that the markets are only efficient for smart money, the small group of people that draw no attention to themselves, okay? The central banks, they drive price, all right? It's their commodity, all right? This is their property, right? This is their casino, all right? They are the house, all right? So they have an edge always, okay? They didn't make this so everyday people can make money and get rich, right? They made this so they can keep the money where they need to keep it with them, okay? All right, so it's not about you, all right? When you come in here, all right, you're fighting against the smartest minds on this planet, the titans of this planet, okay? You're on this. It has to be obvious that they're just the titans on this planet, all right? On this rock that we live on, okay? And nowhere else, all right? The markets are controlled to the smallest degree, all right? It's AI, all right? A computer program that delivers price, all right? This is wonderful news for us, all right? Because it means that it can be identified and it can be tracked, all right? Because it's following code, okay? It used to be in the open outcry pits when, you know, people used to be in the pits and they would be like screaming, let me get 24 of this, 25 of this, right? It was human beings that were obviously controlling price action behind the scenes. But once they digitized and went electronic, all right, it was AI controlling. AI existed before AI is currently became a thing right now that we know AI to be, okay? It's always been there, right? So it's following code. When you're able to do this, right, when you're able to identify and track IPTA, okay, that's when you're able to leave the realm of speculative, uninformed money, all right, and join the smart money who are behind the scenes knowing what's going on, right? As you can see, no entry for us here. No entry for us here, all right? We would have definitely got bread and butter, all right? Not yet, though. We want plausible deniability here. We haven't got that yet. Yep, there we go. Bread and butter. No, 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 no. What the hell? 6550. Yeah. If you don't get me, you don't get me. All right. We'll just watch it regardless and see what it does. This is the low, all right, that would need to go to change, obviously, to let us know that we're offside and to give us a retracement setup, okay? 10 o'clock, it's about to be completed in a bit. We'll have our opening range. We'll see what that one is saying, all right? But for now, we haven't been tagged in this trade yet. If it goes without us, it goes without us, okay? Nothing wrong with that, okay? So this is the market efficiency paradigm, right? This is a game changer, right? We think the big circle is controlling the price with our buying and selling pressure, but it's really that small group of people, all right, smart money, the people that are in the know, right, behind the scenes. They're the ones that control the markets. They're the ones that control these price action, all right? Market is only efficient for the smart money, all right, and not the speculative uninformed money, okay? We are liquidity. We are the willing and unwilling liquidity, okay? And these markets, smart money, they're not particularly coming after us small people and us our stop losses, all right, and our little two contracts that we're trading here, okay? They're not after us, all right? It's a battle between them and the hedge funds, all right? The big powers, the big banks in this on this planet, right? It's a battle between them and the people in here, the big banks, the hedge funds, the mutual funds, all right? Those are the ones that they're going after, not us particularly, okay? Not us in particularly, but it's a battle between smart money and big hedge funds, okay? All right? Just understand that the battle, who's in this game here and who is really like versing who, okay? We're just speculators, right? We're little fishes in this big ocean, all right? We're tiny fishes, right? But we're made to believe that it's us that drives the price, and it's not, all right? This is false, okay? It's AI, it's IPTA, she does it, okay? All right, so the AI behind, all right, these markets, all right, is called IPTA, Interbank Price Delivery Algorithm, okay, IPDA, all right. The algorithm's purpose, all right, has two main purpose, right? It does only two things, well, three things, let's say three. It does three things, all right. All right, first, right, it only moves, right, to seek liquidity above and below price, okay, liquidity in terms of highs and lows, all right, session highs and lows, daily highs and lows. Oh, 10 o'clock. Let's get open range, DM range. We can go ahead and wait. What did we get? We got -1. Did we get -1? Did get -1, didn't we? Now I know I have this data somewhere. I think if it goes to -2, then I can delete that. Anyway, it's a demo. Let's experiment here. All right. Let's experiment. Let's leave it here and see. This is still the load that needs to go. Okay. So until that low goes, this is still a valid setup. Okay. I really want to do an entry drill on the 15 seconds on the 15 seconds today though, so I can get, you know, acclimated and to the 15-second entry, and just, you know, I didn't see anything on the 15 seconds. It was the same high here, so fair. All right, we got our AM session open range. All right, so all right, let's back into IPTA. Back to IPTA. We're still talking about how the market operates, okay? This is how the market operates, right? The algorithm that controls price from the central bank level, all right, IPTA, all right, only moves for two reasons, right? It has three purposes, all right? First is to seek liquidity above and below price, okay, accumulate. All right, this when you see swing highs, swing lows, all right, session highs, daily. I think that's what we were talking. I stopped that. Session highs and lows. All right, daily highs and lows, weekly highs and lows, monthly highs and lows. All right, all the highs and lows. All right, does liquidity. Okay, so above. Hold on. I don't know if you can see. Let's go above. Let's do here. Can you see this one? Yeah, you can see that one. Above this swing high, okay, sits liquidity, okay, all right. People put their stop there, right? Somebody probably sold there. They had some reason to sell there. They put their stop, all right, because when we come into this, we're told to put our stops above and below highs and lows, okay. So above highs and lows, there's a lot of liquidity that rests there, and that's what IPTA is seeking, okay. Liquidity above. As you can see, we sought that liquidity above this swing high here, okay. It took it, all right, right there. Simple dimple. All right, and two, to reprice to any inefficiency above or below price, okay, to fill in gaps, fill in inefficiencies above and below price. All right, this right here is an inefficiency. It's a fair value gap. It's called a BISI. It's a buy side imbalance, sell side inefficiency. Okay, it's a price comes in, fills that inefficiency there in price, okay, and continues higher, seeks liquidity here, okay, and continues and takes AM session buy side from Monday, okay, from that short session that we had yesterday, okay. That's what price is doing, right? It's moving. It has three purposes, all right. Seek liquidity above and below price, okay. Reprice into any inefficiency above and below price, and if it's not doing any of this, it's consolidating, all right, which meaning it's stuck within a range, all right, which is usually what we get during Asia session, okay. As you can see, this right here is a consolidation, all right, price is stuck within a range, okay? That's what that basically means. So if it's not seeking liquidity above and below price, or repricing to fill inefficiency above and below price, all right, it's consolidating. It's simple, right? Doesn't have that many options. She doesn't have that many options of things to do, right? She's either going high to reprice to inefficiency or to seek liquidity. She's either going low to reprice to inefficiency or to seek liquidity below price, all right? If none of this is happening, we're in a consolidation, okay? Hold on. Yeah, let's get this picture in here as well. We'll make it easier. Guess we're building it as we go, innit? Where did it go? Do an empty one. Let's get this one. Just a visual representation of what I'm talking about here, all right? So you have an idea of what's going on. Because I know some people are visual learners, okay? They don't just learn by listening to somebody yap. People need to see what the hell you're talking about. So this is what I mean, right? By liquidity, okay? This is above this swing high is buy side liquidity, all right? Price is seeking that. Below this swing low down here is sell side liquidity, all right? So we're either seeking liquidity above or below price, all right, or filling inefficiencies. You see here the imbalance, fair value gap, something that we just went over in the price action just now, okay, all right. It's coming down to fill the imbalance, all right, and then continue to seek liquidity, all right. And if it's not doing any of this, it's consolidating where it's like stuck within a range here, okay. This is an example of a consolidation in price. And that's what IPTA is doing, right? That's the only three things it's doing. So now we have a little bit of a better understanding of how these candlesticks move, or why they move, why they do the things that they do, right? All right, we understand the who behind money, all right, central banks, all right? They are the smart money behind price action, okay? They control it, it's their asset, it's their commodity, okay? And these candlesticks are being controlled by AI, all right, called IPTA, all right, Interbank Price Delivery Algorithm, okay? And IPTA only moves for two reasons, all right? She moves to seek liquidity above and below price and to reprice and reprice to any inefficiency above and below price, okay? And if it's not doing one of these two things, it's consolidating where it's stuck within the range, all right? That's pretty much the movements of IPTA right there, okay? Not too complicated, all right? It's not too hard. You just first had to get over the mental hurdle that these candlesticks are controlled, okay? Once you overcome that mental hurdle that this is controlled, okay, and it's running on a program, on a strict program at that, right? Sometimes obviously there is manual intervention, all right, where the hand go in and do what they do, all right? This usually occurs during high impact news like NFP, FOMC, CPI, okay? So when those news events come out, all right, it's typically manual intervention where they go in physically and they disrupt price, all right? That's why you see all the, that quick sudden move down or quick sudden move up, okay, that's manual intervention. If we don't have manual intervention, the candlesticks are pretty much pristine. Price action is pretty much, it's beautiful, right? Once you understand the storyline behind it and what it's doing, it's just, it does it to script, to the T, you know what I'm saying? You know what I mean? All right, with that in mind, right, understanding that IPTA only moves for two reasons, right? Right, and if it's not doing one of the two things, it's consolidating, right? It's imperative to understand that as a technical trader, which we're technical traders, all right? We only need one pattern, all right? One setup to trade on, all right? It's important to know that every trading model loses, okay? You have to accept it. The goal here is to find your unique model and just grow with it, all right? Refine it as much as you can, okay? I think we can go back to this slide here, okay? We're on to trading model, right? In terms of building confidence in your trading edge, right? You have to understand how the market operates. We just went over that. All right, now you only need one trading model, one pattern, all right, that has IPTA signatures, all right, what we just talked about. You need IPTA signatures, all right, We don't need multiple models. You don't need multiple setups, all right? I remember when I first initially started trading, I used to jump from strategy to strategy to strategy, and I know you've been there before. We all been there. This is just, nobody's different, right? There's no new storylines, right? We all know what the hell it is, right? I wouldn't give any model or strategy like the opportunity to collect enough data on it, right, for it to prove to me that is profitable. As soon as it took a series of losing trades, I'm like, I'm on to the next already. Like, I was trying to find the holy grail of trading in terms of finding a model that never loses, right? I didn't want to take a loss. Nobody wants to take a loss. We don't enjoy losing here, all right? But it's the only thing promised to us, right? I was just on the hunt looking for the holy grail of trading, which I now know is risk management. It doesn't matter what the model is, right? As long as you manage your risk, all right, that is the holy grail of trading. That's what will keep you in the game long after everybody else has skill. We'll talk more about risk management tomorrow when we talk about risk management Wednesdays, okay? But there is no holy grail in terms of a model, all right, or pattern in price that you're looking for, okay? The holy grail is risk management. But as technical traders, all right, we only need one model, right? One pattern, one setup. We don't need multiple, all right, to achieve success here, okay? Da, 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 da. Yeah, this definitely needs a revamp for sure. It needs a revamp because I no longer want to, include any of these. So understanding that IPTA only does three things, right? So you have two options, right? You have two options. Which model are you going to, which setup are you going that has IPTA signatures are you going to be looking for? Are you going to be looking for liquidity? All right, you're going to be basing your setup or pattern on liquidity, or are you going to be basing your pattern and setup on inefficiencies? There's only two things, right? It only does two things: seek liquidity, reprice to fill inefficiencies, right? For me, all right, personally, I'm the trader capital. Us here, anyway, we deal in liquidity, okay? Because for me, that's something that's easy. Not liquidity is the foundation, right? But it doesn't mean that I don't include inefficiencies in my setup, okay? So let's just get that, straight, right? But liquidity is something that's easier to see for me in the price action, okay? Trading is a solo sport. What may work for me may not work for you, okay? You have to be in here and feel and get a feel for what what you gravitate towards and what works best for you, okay? For me and us here, I'm the trader capital is liquidity, okay? Because it's easy to identify, all right? The liquidities, the important liquidities anyway, because it's just session highs and lows, all right? Previous days highs and lows, weekly highs and lows, monthly highs and lows. Those are liquidities that will never be hidden from you. It's not hard to see, right? For me, inefficiencies are somewhat difficult, okay? Because it's like, how do you know which, obviously now there's techniques to know which inefficiencies is highly probable than the next, right? But it's like trying to figure that out is just an extra step that just complicates trading that I don't want too much complications in my trading, okay? I like simple things. I like it straightforward. I like a 1, 2, 3 step, and then bing bang biggity bosh, I'm doing the same thing over and over again. We're taking open range session buy side, confirming our session program as a buy program in line with our daily program, okay? So it missed us here, okay? It missed us. It missed us. It didn't come into that high that we wanted it to come into. Even on the supporting time frame, it didn't come into it, okay, which is fair. It did come into an inefficiency though, okay? It did come into an inefficiency, but we're not inefficiency traders, okay? So it missed us. It missed us, right? It is what it is. If it hits our target here, terminus, okay, I will be closing this limit order here, and I won't be interested in this anymore. The idea was there, okay? The idea was there. We did continue higher to take buy side here before coming down into our entry, okay? So potentially that could be an entry point for us here, all right? All right, once we hit our terminus on this setup, we'll go ahead and follow it based on this high here, okay? Now for newbies, right, they will feel some type of way for missing this setup, right? They'll feel some type of way about price not coming down to set them up. I'm speaking from experience, all right? Back back then, all right, when I initially started, if this had happened to me, okay, I would feel some type of way about not being part of this move here, okay. I would feel some type of way, and I'll be like looking for any way or anyhow I can jump on board on this train to catch my move. I'm like, yo, how you going without me? All right, I waited patiently for you, and now you want to go without me? That's crazy. That's crazy. But the maturity in me right now is like, there's so many opportunities here, right? I don't need to chase price. I don't need to feel no type of way about missing a setup, missing a move, okay? Because I know the capabilities of my model, all right? And what I'm looking for in price action is going to repeat itself multiple times in the day, right? I have 7 opportunities here from New York session to New York ending, all right? In the New York sessions, I have 7 opportunities, all right? 950 macro, 1050 macro, 1150 macro, 1250 macro, 150 macro, 250 macro, 350 macro. All right, 7 opportunities, all right, to get into the market, to have an opportunity for a setup to form, okay. So there's no need to feel no type of way when you miss a opportunity, okay. You just wait for the model to present itself again, all right. If it does, you take it. If it doesn't, another day on the job. Simple dimple. All right, we complicate this too much. We complicate it too much. So having one trading model, I need to adjust the material on the trading model. Okay, so that will be on the to-do list. The whole thing needs to be revamped, really and truly. I just started with money and mindset because we do that twice a week. Just put it on there. Training material needs to be. It was slide too, right? This was like the same thing that happened last week with that slide swing high that it wasn't even noticeable, right? It was the same thing. I had to pay attention with right here to see that. Yeah, we did trade below it. Anywho, I don't have this thing here. I don't know where my chat box thing went. So hold on. We can't see nothing. All right. It's missed us with it. That's all good. Let's follow it from the entry up here and see what it gives us. We would have got bread and butter already there. This right self in itself is a setup. Not for me though, because of time and price theory. Ooh, it would have given you an entry here on support and time frame. I guess from seeing this and the continuation, this is also a continuation sample, right? It just doesn't have time. But there's nothing wrong with the entry there. Nothing wrong with the entry there. Would have given it to you. Bing bang biggity bosh. -1 right there. Idea was there, setup is there, okay? We wasn't tagged in it. Alright, it is what it is. That's just how the cookie crumbles sometimes. You just have to let them go. We'll be waiting till 10:50 to see what else this price action has in store for us today. But back to this thing here All right, I do need to adjust my information here for trading model. Okay, like I said, we only need one pattern with IPTA signatures. All right, you're either gonna set the foundation on your entry pattern, not entry pattern, your setup or your model based on liquidity or inefficiencies, okay? Because those are the two things that IPTA is seeking and hunting. Or you can do both, right? You can combine the two and do both, all right? For me, I can do both, all right? But I choose to do one side. I'm also obviously collecting data on the other side of it as well, okay? Having an entry at the swing highs, okay, the market structure shift, and also if there's an inefficiency that price comes into, okay, that can also always be an entry option as well, okay, part of your model as well, okay. Like I said, personal preference, right, whatever works for you and what your eyes gravitate towards when you're in the charts, right. So once you understand the market and you have one trading model with IPTA signatures, okay, the next step, all right, to build confidence in your trading edge is have a plan and a process, all right? You need to know what you're doing, how you're doing it, when you're doing it, all right, before and during, after each trade, okay? Like I said, successful trading is boring. You're doing the same thing over and over and over again, okay? It's like your job. Once you start a new job, right, and you get trained on that job, right? Typically, you're doing the same thing over and over. The days may be different, right? Some minute differences within the days, but the job in itself, it doesn't change, right? You know, you have a core task that you're doing, all right? And that's the same mentality that you need to have here. There's the same mentality you need to have in each and every trading session, okay? There's a core task here that I'm here to do, okay? Obviously, the days may be different, the candlesticks may be different, the market condition may be different, but my core task doesn't change, right? What I'm constantly doing in these charts doesn't change. It stays the same, it remains the same, okay? And that comes with having a plan and a process that you're following consistently. Do something, oh, hey, I can flip it like this. Okay, that's cool. That's cool. I like that. So when it comes to a plan, okay, trading plan, you need to have a trading plan for three things, right? For the account, for the risk, for your risk management, and for trade management, okay? For the account, for your trading account, right? These are the questions that you need to ask yourself, right? It's basically a business plan, right? It's a business plan, okay? For the account, each account needs its own plan, okay? You can, but I don't recommend it, all right? If you have multiple accounts, all right, that account needs its own plan. It needs its own business plan, okay? You cannot have a store that sells ice cream and sells pizza and then sells freaking pasta, you know? It just doesn't make sense, right? And sells panties, right? It's all over the gaff, right? It's just confusing. Did I come here to buy drawers or did I come here to eat ice cream and pizza and pasta? You know what I mean, right? Pick a side. So you need to have a plan for each account, okay, that you have at your disposal, okay, and you need to be able to answer these questions, right? How are you going to approach the market, right? What's the main goal of the account, right? Is it to make ends meet? Is it for to make money for investments? Is it just to take care of you? Like, have a purpose for the account and what you're trading the account for, okay? All right, what are your monthly and weekly targets? Always have targets, always have targets, always have targets, always have targets. Always have monthly and weekly targets, okay? Put some constraint on you, all right? Because if you don't, right, if you don't have something to strive for, right, you're gonna strive for nothing. You're gonna continue to keep going into the market when you don't need to go into the market, okay? To The more times you're in the market, all right, the more opportunities you're giving the market to take everything that you've earned from it, okay? So once you get your winning trade for the day, be content with enough and have a target. Once you hit your target for the day, for the week, okay, leave the account alone, let it go, all right? As Elsa says, let it go, let it go. All right. What asset class, all right, and market within that asset class will you be trading? Okay, be a master of one initially, all right, to start off with. Master one asset class, one market within that asset class, all right. For us here, we trade the futures market, and within that futures market, all right, we trade NQ, all right, M and Q obviously is the same thing as NQ, but different. Macro and mini is the same, not the same typical price action, but the asset class is just, this one is just a less, what's the word, less expensive version, right, of NQ. NQ is the, the big dog, right, and MNQ is like, the little tiny baby, all right, market for newbies to jump in and get their feet wet, okay? Capital wise, right? That's what's important. Capital wise, if you have more money, okay, obviously you can trade NQ, comes with more risk, right? But if you have less money and you just want to get your feet wet, MNQ is best, all right, for that, okay? So pick one asset class, whether it's going to be crypto, whether it's going to be commodities, whether it's going to be stocks, right? Pick one asset class, and then within that asset class, one market within that asset class, okay? So if you're going to go for stocks, is it going to be Google? Is it going to be SPY? Is it going to be Facebook, right? Pick one stock within the, the whole broad stock market, right? If it's going to be crypto, right? Is it going to be Ethereum? Is it going to be Bitcoin? All these other cryptocurrencies that they got going on, all right? I only know Ethereum and Bitcoin, to be honest. So pick one, right? And be a master of one, right? Master one thing. And then obviously after you've mastered that one asset class, one market within the asset class, if you want to add more, which I don't recommend, if you want to add more, then it's just a personal choice at that point. But master one first, right, before moving on and adding more to your plate, okay? Also, each business needs business hours, right? For a business, you need business hours. What time and days are you going to trade, right? What time and days do your current circumstances allow you to trade, right? Because some people watching this, some of you have 9 to 5s, right? Okay, so does your 9 to 5 allow you, all right, to then be able to take a trade, right? What time does you being at work allow you to take a trade? Pick a business time, all right, in days that you're going to trade, right? And then we have an example of, a blueprint of what you can follow, right? So you can focus on an approach or plan of action that can harvest monthly ends and investments, okay? All right, I would do them separately, okay? So your monthly goal initially, for me anyway, this is what I'm following, all right, to start off with. This is what I'm following. So just for a little bit of what's the word? What's the word when you like put something out there? What's the word? Damn, I'm not good with the English language. Anyway, I'm focusing on an approach and plan of action, okay, that can harvest my ends meet, okay? That's what I have, one account for ends meet and another account for investments, okay? Okay, this would be like earned income and for passive income, right? I need an account for each one, right? Always keep money and mindset in the forefront. The target here is to earn income, all right, to buy as passive income, okay? Remember that as the goal here. That doesn't change. That doesn't change, all right? Okay, my monthly goal on one account, all right, is to meet my break even for the month, right? So that account, its goal is to meet my ends meet for the month, okay? And it's done trading, okay? Trading, obviously intraday, futures trading, day trading, account size of 50K funded account is an example of what we're doing here, okay? Trading hours here, we trade AM session 9:30 to 11:30, and PM session 1:30 to 3:30, New York local time. That's an example of a trading plan, okay, that you can follow, you can mix up, all right? You can use it as an idea, all right, to switch up for you and your current time constraints, all right, and what you can do, okay? It's not the end all be all. Wrong thing, wrong thing, wrong thing, wrong thing, wrong thing. All right, so when it comes to risk management, all right, you need to have a plan for your risk management. Have a plan for your risk management. Are we at all-time highs? Yeah, we are all-time highs, aren't we? Yeah, buddy. Let me see how many contracts up here would have allowed us. Probably like, it would have been one contract. Larry! Oh no, it still would have given us, oh no, actually. Yeah, one contract, Larry. So -1, it would probably be out already here. Q, 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 Q. Fair enough. Fair enough. So for risk management, all right, your procedure should ensure that no single trade or series of trade can significantly impact your account, okay? Capital preservation is our number one job here, okay? That is our number one focus, all right? Preserve capital, control the risk, okay? Control the risk in your account, because if you don't do it, nobody else is going to do it for you, all right? And you're surely going to lose in this game, okay? This is the holy grail of trading, all right? Risk management. So it's imperative to have a plan, all right, for your risk, okay? And this is where it's going to differ for a bunch of people, okay? Because we all have different risk tolerance, okay? My current risk tolerance right now is I can only afford, for me, $500 right now, where I'm at. $500 max within is a loss that I can afford, but I'm still obviously below that minimum threshold, okay? But for me personally, I feel like losing $500, I will still be okay to proceed and carry on trading, okay? That's why I've started at my minimum lowest leverage, which is 0.25, okay, which is right now $250, okay? It's half of my max, right, what I can take. And for me, all right, well, for you, it will be different, right? My risk tolerance won't be the same as your risk tolerance. You have to demo, all right, different risk parameters and see which one suits you, because you might think that you might be ready for a 1% risk per trade, right? Until you take a 1% loss and you're like, oh shit, this kind of stung me a little bit, kind of burnt a little bit. I don't think I can keep this up, right? And keep trading, okay? All right, by your feelings, right? By how you feel inside, how you feel when you take that amount of loss, right? You have to be in tune with yourself. One thing trading has taught me is it taught me a lot about myself, really and truly. I thought I knew myself, but I really didn't, all right? Until I started maturing in my trading. That's when I really started to really take inventory of who I am, what affects me, what motivates me, what moves me, and what I'm actually looking for, right, in life, right? What am I looking for in life, right? These candlesticks have revealed a lot about myself to me, and that's what it is a mirror, right? What you see here is just reflecting you and the person that you are. So if you're impulsive, right, if you're impulsive, you're going to make impulsive decisions in the market. You're going to take a loss and you're going to be like, oh shit, the market took from me, let me go back and get it back, right? That's It's going to be a reflection of you, who you are, all right, and what you're doing, what you're looking for in life, okay? Take that for what it is, okay? But all I can say is that trading has taught me a lot about myself that I didn't know, okay? For me, one thing that trading has taught me is that I like structure, right? I like structure in what I'm doing, okay? I don't like to show up to things or do things that doesn't have structure. Hey, this was happening here, and this will happen after that, and this was happening here, and this is how we're gonna end it, right? I like structure. I like step-by-step processes. I like doing things in order. All right. Hey, step 1 leads to step 2, which leads to step 3, which leads to step 4, and that leads to completion of the task. All right. That's one thing that I realized about myself. It's always one thing that I was seeking. Like, I need to know what I'm doing. Step 1, step 2, step 3, step 4. All right. Simple. That's how my brain works. It's just simple. All right. Step 1, do this. Step 2, do that. Step 3, do this. And I didn't have that in the beginning, so it was very much all over the place. Okay. Anyway, back to risk management and the blueprint. I like to go off on tangents, all right? But anyway, risk management blueprint, all right? Risk no more than 2% of your equity for any trade, okay? Even 2% is a tad too much if you have I'll say 1 to 2 years of experience in trading, risking 2% of your equity is just a bit too much. It's a bit of a madness, to be honest, okay? I'll stay at 1% and below, okay? Until you build more experience and gain more knowledge and collect more data, okay, in your model, in what you're looking for in price, and you can prove to yourself disciplined enough to do the same thing over and over and over again, all right, and that you found that your data set that you've collected, proven that your model is consistent, is profitable, then I would say go to more 2%. But even then, you're gonna have to work your way up to the 2%, right? Like, I'm starting at 0.25. I'm gonna work my way up and see how I feel when I get to that 2%. And if I don't like that 2%, I feel some type of way, obviously I'm going to increase incrementally as my body allows me to, okay, as my body allows me to do it, okay. Have a model that offers a 1 to 3 RR, okay. Risk reward starting off is helpful, but it's not the end all be all, okay. It's just a tool, okay. Have a model that offers a 1 to 3 RR, all right, because that means you need to be right 25% of the time, and you can be wrong 75% of the time and still be profitable if you have a 1-to-3 risk to reward ratio. Okay. After a loss, all right, cut leverage. All right, what are you going to do? Are you going to reduce your risk? All right, after you take a loss, okay, because we know that the only thing promised to us is losses, right? So we're always mentally preparing for the loss that's coming, for the series of losses that's coming. So it's imperative, right, to once you take a loss to adjust risk. It can even be 2 losses, right? Once you take 2 losses, then you adjust risk, all right? But after a certain amount of losses, okay, you need to be adjusting the risk. You're not taking the same amount of risk each and every time, okay? All right. These are just ideas for you to work off by, okay? It's just to put something planned for you, but obviously you have to test these out and see which one works for you. Okay, after 5 consecutive wins, all right, reduce leverage. Okay, right now I'm at my lowest leverage size, so there's no need for me to do any of this in terms of cutting leverage and increasing leverage. But obviously, like I said, I'm working my way up the leverage chain, all right, to get to that 2%. Again, as I get there, I'm going to increase and reduce as I take losses. For me, I think I'm going to do 2 losses and then I will reduce my risk. Okay, but that's still something in the works. Okay, as I'm building the confidence and getting used to the 0.25% risk that I'm taking right now. Okay, maximum 2 to 3 losses per day. Okay, based on your risk parameters. Okay, if your risk parameter says $1,000 a day and you're done. Okay, but depending on your risk per trade, right, will depend on how many losses you can take in that day to hit that risk parameter for the day. Okay, we also have to have a max risk per day, per week, per month. Okay, like I said, set yourself limits, right? Because without limits, all right, you're gonna spiral out of control and you're gonna keep trading. You're gonna overtrade. All right, that's what leads to overtrading. When you don't have limits for yourself in terms of your targets, in terms of your risk. Okay, that's what leads to overtrading because you haven't set any limits for yourself. Okay, obviously it takes discipline to set a limit for yourself and then and stick to that discipline. Stick to that limit, right? Because nobody's controlling you. You don't have a boss here, right? You don't have anybody micromanaging you. So it's up to you, right, to set yourself these parameters and risk, all right? And it's up to you to follow them. Because I can't make you do them. I'm not with you during your trading session. Nobody's here with me, overseeing me, looking at me and be like, hey, Alice, you said only 2 losses and then you're going to stop trading. So you need to stop. You took that 2 losses, you need to stop trading. Nobody's over here doing that for you, all right? It's a solo sport, okay? If you don't have control of yourself, you're doomed, right? The hardest thing here is to overcome you, the person that you are, right? Greed and fear, overcoming that is tough, all right? So you have to be stronger mentally, all right, to overcome those 2 things that causes 90% of traders to fail. All right, like I said, these are just ideas. Have a weekly, monthly targets, all right, that when you hit them, be done trading for the day, for the week, all right? Just go enjoy the rest of your life. Have a life outside of trading as well, okay? Something that you do when you're done trading here, when you hit your targets or you hit your risk parameters, go do something else that takes your mind off these candlesticks, okay? Because if you allow it, the market will take up all of your time, okay? Also, are you going to manage, all right, risk management wise, are you going to risk the same amount for your pro trend trades, all right, trades that are going with the trend, or for counter trend trades? Is your risk going to be the same for each of these trades, right? Obviously, a pro trend trade means you're going with the trend. Counter trend trade means you're going against the trend. So are you going to have different risk parameters for these trades, all right? Because obviously the probability in a counter trend trade reduces significantly if you're going against the trend of the market, right? I always forget, every time I take out one of these movies and put it on the desk, I always forget to drink it. Anyway, plan and process, that's what we're talking about. We're talking about having a plan and a process, right? We're currently on the trading plan, okay? We talked about having a plan for your account and risk management. We just went over. And the last thing that you need to have a plan for is trade management. How are you going to manage your trade, okay? Pro trend trades, counter trend trades, are you going to manage them the same, okay? Are you going to manage them differently? The same for risk management, right? You're going to have different risk parameters for pro trend trades and counter trend trades, okay? Same thing here, right? Are you going to partial or are you going to full pull, right? is going to be either it hits my stop loss or it's going to hit my take profit, all right? Or you're going to take partials as prices moving in your direction, okay? It's all personal preference, all right? There's no like end or be all. It's just whatever works for you, it works for you, right? Whatever you're used to doing. For me, I'm a partial trader if my risk allows me to be, okay? I like to take partials only if my risk allows me multiple contract size, all right? Then I will partial as it's hitting my levels of where I want to, you know, my target, which is for me is the fib levels, okay? The fib levels, as it's hitting those, if it's giving me enough contracts to partial, I will partial, but majority of the time I'm one contract Larry. So it's typically a full pool trading scenario, okay? But obviously sometimes I get multiple contracts which I'm allowed to partial, okay? Stop loss adjustment. Are you going to leave your stop loss where it's at, or are you going to adjust it as price moves in your direction, right? You need to have a plan and procedures and protocols in place for all of these things, right? For me, I do adjust my stop loss as price hits my targets. I reduce my risk in the trade, okay? For me, it's about capital preservation, but I need to be more focused on the profit taking than actually adjusting the stop, all right? Just because sometimes I want to give you don't give the trade enough room to breathe, right? I found that the best thing for me and my model, right, and what I'm looking for in price, right, that going to break even at -3 is what's best for me because it gives the trade enough room, right? Because right now we would have hit -1 here, okay? My stop would be at 0.75 of this range right here, okay? My stop initially would have been down here. Let's draw. So entry, let's say our entry was here, all right? Stop was here. Stop is here, okay? At -1, right here, once -1 gets hit, my stop goes to 0.75. My stop would be adjusted to right here. At -2, right, my stop goes to 0.5, and then at -3, I go to break even right here. My entry a little bit better than break even, okay? So that's how I adjust my stop based on the partialing, all right? That's only if obviously I have enough contracts to be able to partial on all of these, right? Sometimes really and truly I'm out by -1, -1.5, -2, really and truly I'm done. Obviously as we build capital, all right, and risk and capital increases, risk won't increase, but the amount obviously in the risk will increase and it'll give me more contracts. So that's my main focus right now. I'm not really focused on the outcome. For me right now, it's about proving to myself my discipline to be able to follow my procedures and protocols, my model, all right, and not deviate from it. All right, so once you have a plan for these 3 things, all right, account, risk management, and trade management, all right, then you need to establish a process, right? What am I looking for here? I'm on it. You need to establish a process, okay? And as you know, at the Traded Capital, we have a 3-step trading process, all right, that we do each and every time we're in front of the charts, all right? Nothing new here, okay? We talk about this all the time. This is what we're doing. Step 1 is conditions, determine the bias. All right, step 2, stage. This is what sets up your trade. What does it look like? There's only 2 types of trades that we take here. We take retracement setups and we take continuation setup. And then step 3, execution, right? This is how you're going to enter, manage, all right, and exit the trade. Okay, so when it comes to condition, I need to adjust this, all right, because it's now different. Okay, it's now different. It will be, yeah, I need to adjust it, but anyway. When it comes to step 1, condition, all right, this is where we determine our directional bias. We don't do anything until we know what program the market is in, right? That's what tells us, hey, whether it's going to be a retracement setup or a continuation setup. And if you don't have a condition, right, we do nothing, okay? Right, so there's obviously different types of conditions. I wouldn't say different types of conditions. There's only 2 conditions. It's going to be a buy program or a sell program, or it's going to be a no program, okay? But there's different ways to determine your directional bias, okay? Depending on what kind of trader you are, right? So for the session, all right, for the session bias in terms of, hey, this is AM session, this is lunch session, this is New York session, this is London session, this is Asia session. For that session, right, in order to determine your bias, you need to use the opening range for that session, okay? Each session has its own opening range, all right, and that will determine your session bias, okay? So for day traders, all right, we're looking for session buys and daily session, daily buyers, okay? For me, for the day, right, I use 12 a.m. right to current price action when we arrive at our desk to 9:15. Okay, I know the highest high and lowest low, and that will give me my dealing range for the day. All right, and if one side of that gets taken, it will give me my condition for the day. All right, and also once 10 p.m. completes, all right, it gives me opening range for the AM session, and obviously that itself lets me know what the session bias is. All right, so today our daily condition was established as a buy program, or once we took dealing range buy side, and obviously the session bias confirmed also supporting that in the buy program because we took open range buy side as well. Okay, I don't know if that's making any sense, but just keep showing up, right? It will make more sense. Just keep showing up. As you hear it over and over again, you will hear what you need to hear in a different season of where you're at in price and what you're at and looking for in terms of what you're looking for in price. Okay, you can also use previous days range, all right, to determine your condition going into the current day. Okay, so depending on whether previous day's high or previous day's low has been taken, right, will give you your condition going into the day for the current day. Okay, as you can see for today, all right, we've taken previous day's high. So if you're using previous day's range to determine your condition, okay, you would be in a buy program coming into today. Okay, all right, you can also use there's multiple ranges, and you can use it for different conditions depending on what kind of trader that you want to be, right? You can use the weekly range, previous week's range, to determine your weekly bias. Okay, but obviously it's gonna for those big ranges, it's gonna take time for price to take either side. So if you're gonna go based on previous week, then it's gonna take you some time to wait for that to establish itself for you to even be able to anticipate a setup. Okay, so just depends on what kind of trader that you want to be and what you're looking for. Right, determine how you identify your dealing range, and then you just wait for one side of that dealing range to get taken. All right, if buy side is taken, you're in a buy program. If sell side is taken, you're in a sell program. Okay, so yep, step one in terms of condition, you identify your dealing range, and then step two, you wait for one side of the dealing range to get taken to establish a condition. Okay, external liquidity and internal liquidity. So dealing range highs and lows are external liquidities, and anything in between the dealing range is internal liquidity. Makes sense? External. So when I talk about we took buy side above external liquidity, I'm talking about the range highs and the range lows. Okay. Less than 2 minutes until 10:50 macro, and we'll see if this price here gives us anything going into 10:50 macro. Solid stuff though. We've come to second standard deviation on the range here. Is this the points? I think it's 0.5s. I need to change it to maybe the ones. Yeah, it's still 0.5s. Now this is where it gets a little bit tricky. Step two stage, right? Step one is pretty much self-explanatory. You identify a dealing range, and one side of the dealing range gets taken. You establish your condition going into your session, going to the day, going to the week, however you want to define it, right? Obviously, I use Monday's range, okay, to determine my weekly program. Okay, as Monday was a bank holiday and price action really wasn't a full day of trading. Okay, we'll be using Tuesday's range. That's the only way, when you switch out from Monday to Tuesday. Okay, if Monday ends up being a holiday, then it's Tuesday's range that we're using. Okay, so stage, this is what sets up your trade and what does it look like. Okay, first things first, we look at the economic calendar. For us, is Econoday. That's our main calendar, and we have Forex Factory as our backup. All right, the economic calendar tells us when to anticipate a setup to form. Okay, we look for medium to high impact news to let us know that, hey, there's going to be manipulation today. There's going to be high impact or medium impact news. Okay, makes it an optimal day for us here to take a trade. All right, that's what tells us when to anticipate a setup. All right, we use the economic calendar. So if there's no news, all right, then we do nothing. We sit still, we tape read, and it's not an optimal day, right? It's a personal preference. All right, but for me and my funded accounts, we won't be taking any trades. I'll be demoing. All right, I don't mind demoing on those days. All right, I don't mind having a separate account for those days. Right? If you're gonna be so eager to trade on those days, trade them on a separate account. Okay. So we've traded time and price theory, all right? So the most important thing for us here, the trader capital when taking the trade is the time, right? At what time? Macro time frames, okay, which is a macro is a set of instructions, a set of order. Oh no. No. My terminologies is just deeply, I know what it is, but it's a set of instructions. Oh, yeah, no, I forgot what macro means. I know what it is, I know what it does, but the actual definition. Oh, I gotta go back. I need to do a rerun. I need to do a rerun. And particularly in terms of everything that I use in my trading, I need to go back and get a deeper understanding of them, right? Especially because, you know, it's what I'm doing. You know what I mean? You know what I mean? But a macro is a set of instructions that IPTA does. I don't have that close by. I don't have it close by. I don't have it close by. But anyway, it's the last 10 minutes on the hour to the first 10 minutes of the next hour, okay? IPTA is set to do a set of movements, all right? It's instructed to do something during the macro, okay? For last 10 minutes of the hour to the first 10 minutes of the next hour is a 20-minute window, all right, for IPTA to do something, right? It's instructed to do something within that 20 minutes, all right? It can either be an expansion leg, all right? It can be the setup for the next move, the next phase of play, okay? I'll get a better explanation for you guys next week, okay? For sure. Put that on the note. But anyway, there are only 4 elements of the market, right? We talked about IPTA and the 2 things that it's doing, seeking liquidity above and below price, all right? And inefficiency above and below price. And if it's not doing this, it's consolidating, right? So IPTA can only do 4 things in the market, okay? These are the only 4 movements and things that it can do, right? First is consolidation, all right? It consolidates, all right? Then an expansion, right? For us here, an expansion is when external liquidity is raided, okay? This is what determines our bias, all right? Okay, and then we get a retracement, all right? External to internal liquidity, and then it continues higher, all right? And then reverse. Reversal is when we go from external to external, okay? This is what flips our bias, okay? So first, all price actions start in the consolidation. All right, then we have an expansion either side of that consolidation. Okay, then price can do 2 things. It can retrace or it can reverse, right? I need to adjust it. There's no the types of trades, right? The 2 types of trades here, all right? The market can only do these 2 things once one side of the dealing range it's taken, okay? This is the expansion phase. We always wait for the expansion, okay? Because that's the market tipping its hand to us, okay? For us, all right, I'm the trader capital. That's when external liquidity is taken from that expansion, okay? So once one side of the dealing range is taken, price can only do 2 things. It can retrace to continue, all right? Or it can retrace to reverse. We always anticipate price to retrace to continue in the direction of where it took, okay? All right? This is external to internal liquidity, back to external liquidity, okay? So retrace to reverse, meaning it can retrace, right, and come and take the other side of the dealing range. At that point, that will change our bias, right? This is external to external liquidity. I don't know if the diagrams are clear, but they're not very clear, to be honest, but we'll work on that. So those are the 2 types of trades, all right? Retrace to continue or retrace to reverse, right? We have a continuation and we have a retracement setup. 10:50, nothing for us to do here though. We don't have price. We have time, but no price yet, okay? Time and price. At 9:50 macro, okay, we have time here on the vertical line. Our price, okay, was dealing range buy side. We took liquidity below it, swing low, displacement, market structure shift back above it. That's a continuation setup, okay? As you can see, so far, doing its thing. So we have time, price is down here, okay, which is open range buy side, right? So that's the only, we have to wait for price to come back down in here to frame an entry to see what it does there, okay? Until it does that, nothing for us to do. Time and price, time and price. When the vertical line meets a horizontal line, I think I did that wrong. But you know what I'm trying to say, x-axis, y-axis. All right, last step in our three-step trading process, execution, right? Can you execute? Have your entry criteria been met to enter the trade, all right? How are you going to enter, manage, and close your trade once you know what type of trade you're taking, okay, and you've met the criteria to enter? How are you going to manage the trade? How are you going to close the trade, all right? How are you going to enter the trade initially, okay? So for us here, I'm the Trader Capital. There are 4 entry criteria that needs to be met before we enter a trade, all right? Most important is time, okay? We need to have time. I would say post 30s and macros, but right now I'm leaning more towards just macro, literally just macro price action and macro trading, macro setups only, really and truly, okay? Still paying attention, still collecting data on the 30s, right? But for now, I'm only entering on macro setups and macro price action, okay? So first criteria is time, all right? Do we have time, right? Is it a macro time for us right now? Or is it a post 30, okay? Nothing wrong with post 30s, but there's lower probabilities on post 30. Not that you're not going to take a loss if you take a trade in the macro, okay? Because losses are the only thing promised to us. But obviously the probability is much higher on the macro because that's when IPTA is set to do a self-instructions, all right? Okay. And then second entry criteria is a key level, okay? For us here is a liquidity. It's either going to be external liquidity or internal liquidity rate, okay? Liquidity rate, the two things, right? From us is, for me anyway, personally, it's easier for me to see liquidity. So that's what I frame my entries on, okay? This is what I mean by IPTA signatures, all right? IPTA runs on time, all right? She runs on time, all right? And then price, okay? So we have IPTA signatures in terms of our executions here, in terms of time and the liquidity, right? Seeking liquidity above and below price and inefficiencies above and below price, okay? So when I say one pattern, one trading model with IPTA signatures, all right, this is what I mean by that, okay? So key level is rated, all right, external, internal liquidity, and waiting for a swing with a displacement and a market structure shift back above, depending on whether we're selling or buying back above that key level or back below that key level, okay? So down here, right, with this setup right now, okay, this is the external liquidity for us. Is the key level is dealing range buy side. Okay, we take liquidity below it. Market structure swing with a displacement. All right, market structure shift back above that external liquidity. Okay, this was a continuation setup for us, right? This is what frames a continuation setup, right? Now, if you were taking buy side, all right, and dropped back down and took sell side, then that would be a retracement setup confirming for us there. Okay. Obviously, there's a lot more subtle nuances that we need to go over, but that's what the program is there for. I'm still giving everything here that I can give possibly, right? I'm not holding anything back. This is my training material, really and truly, that I'll be using, right, to train my traders. I'm the Trader Capital, and you're just getting it here for the free skis, all right? There's different types of entries, all right? Different types of entries that you can take. It just depends on you and what you see in the price action, okay? You can be a mitigation block trader, all right? In terms of, hold on, let's come back here. Actually, that's gonna be mad, isn't it? Yeah, I'll see how I'm gonna do that later, okay? You can be a breaker entry, entry, a fair value gap, liquidity void, entry, pattern, order block, okay? If that's what you see in a chart, it just all depends on what's easier for you to frame and see in the chart. What's easy for you to see in the chart? Is it easier for you to see this fair value gap here? Sorry. Is it easier for you to see that fair value gap there in price, okay, after that market structure shift, right? If it's easier for you to see that, that would be your entry point, right? Is it easier for you, all right? Hold on. And we have market structure, right, which is this high where where I personally enter, okay? It's easier for me to see this market structure shift, the old high, okay? Obviously, with depending on what kind of entry trader you want to be, right? Sometimes you may not get tagged in a trade, right? If you're an order block trader here on this order block, after the market structure shift, price doesn't come back into that order block, right, to give you an entry. After that market structure shift, right? Because hold on. I'm trying to see even on the supporting time frame after the market structure shift if it comes back. Yeah, right here. It doesn't come back into that order block to give you an entry, right? So depending on what kind of array that you use for your entry, okay, it determines whether you're going to be tagged in a trade or not tagged in a trade. For me, I prefer the old highs and lows, where the market structure shift occurs, because that's one thing that you know, right? It's not 100% guaranteed, because obviously it didn't come to this market structure shift, but it came to this market structure shift, right? It gave this market structure shift an opportunity. For me, that's what I found, that 90% of the time, all right, price will come back into that old high or old low, okay, and then go in the direction where it needs to go, okay. So for me, that's why my entries at the market structure shift, high and low, okay, old highs and old lows. Because once again, if they're seeking liquidity, all right, above and below price, so that's what's obvious for me, swing highs and swing lows. That's obvious for me to see in the charts, okay. And that's pretty much it for our planning process and building confidence in your trading edge, right? So understand the market and how it operates, have one trading model, have a planning process that you follow each and every day, each and every single session, all right? You're doing the same thing over and over, right? This is what we've been doing over and over again since we started these streams, and nothing's really changed, nothing's adjusted, all right? You're seeing the results. All right, we are taking loss, we're taking series of losses, but it's not breaking our account, all right, because we have the holy grail of trading, which is risk management. We have a plan for our risk management, okay, that we're following as well, okay. So even when the process fails, right, we have a backup tool, all right, that helps us to have longevity and stay in the game long term, okay, because we're trying to build a career here, right? We're not here to just get rich quick, all right? This is a long time, lifetime career I'm building here, you know what I mean. The more I do this, all right, the more easier it gets for me, all right, to explain what I'm trying to actually get across, okay. I'm always looking for ways to be a better communicator, a better educator. So if there's anything, right, that I can do to help whoever's listening understand further, all right, just reach out, all right, reach out in the comments, reach out however way you can to me, and I'm always looking for feedback and criticism, okay, all right, because I want to improve. I want to be 1% better, not just in my model or in my trading, okay, but I want to be 1% better as an educator, as an analyst, as a trader, and as a communicator, okay. So anything that I can work on personally to deliver this information, okay, because I feel like this information is gold, not just because it's coming from me, all right, but this is information that I wish that I had when I initially got into this industry, okay. If I had what I'm providing, what I'm trying to provide to you guys, okay, if I had it when I initially started, I think I would be much further ahead than I am right now, okay. Not that I'm regretting anything, okay, because everything happens for a reason and everybody's on their own journey, okay. If I didn't go through the journey that I went through, I probably wouldn't be the person that I am today, okay. So I'm grateful and appreciative for the journey that I went through, okay, but it's not a journey that I want everybody else to go through, okay. There's a way to do this and do this right, okay, and I wasn't taught that initially when I first came into here. So I want to be that kind of example, right, for newbies coming in here, because like I said, this is where the money game is played, and 90% of us fail, and it's not because it's difficult or hard, all right, because we don't come in with the right mindset, we don't have the proper information, all right, to be successful here. But anyway, this is the 8 steps, all right, you need to take to build your edge, all right. To build confidence in your trading edge, you need to take these 8 steps, all right. First, you need to know and understand the market and how it operates. We just went over it today, okay. A market brings us back to the market efficiency paradigm, okay. There's tend to be a disconnect in terms of how people think the market actually operates and how the market actually operates, okay. We think that our buying and selling pressure as speculators, as individuals in this, the small fish here. We're made to believe that it's our buying and selling pressure that makes these candlesticks move up and down, but it's not, okay. There's a small entity behind the scenes who control these candlesticks, okay, because it's their commodity, all right, it's their asset, they own it, they set the price, they control the price, all right, they control it, all right. You have to know your model, all right. first, you need only one model, one pattern with IPTA signatures. It's either going to be liquidity, based on liquidity, or it's going to be based on inefficiencies, or it's going to be both, right? But you need one model with IPTA signatures, all right? Have a written plan. We just went over that. A plan for your account, a plan for risk management, a plan for trade management, okay? Have a written plan, all right? Follow a repeatable process daily. We just went over the 3-step trading process that we do each and every time we're in front of the charts, okay? Have a repeatable process. You're doing the same thing over and over and over again, okay? Obviously, as you collect more data and more experience, you can refine that process, which is what I've been doing, all right? Since I started for 6 years, I've been refining the process, and you know, and now it's got to the point where I'm starting to see the consistency and the profitability in that process, okay? Backtest your model, go back into the price action, look for that model, right? Look for your pattern. How many times does it occur? How many times is it profitable? How many times does it lose? Okay, when it lose, how does it lose? How long does it take for it to lose? When it hits its target, how long does it take for it to hit its target? All right, collect all that data in the past, right? Because hindsight is 2020, and hindsight is how you grow and how you actually get closer to your model, all right, and your procedures and protocols. So backtest your model and then forward test it in real time, all right? Without taking any trade, forward tested, you're tape reading, right? So you're just watching the price, the candlesticks print, and you're like, okay, so if this happens, this will confirm my model, and this will be my entry point, okay, and then my stop would go here. So then let's watch the price action. Pay attention to the candlesticks and what they're telling you. That's how you get the signatures that lets you know, hey, I'm on side or I'm off side, okay? So that for me, that's my next phase, right? Not that something I'm collecting data on, like that lets me know, hey, if this happens, this signature happens in price, I know I'm offside, okay, and if this happens, I know I'm on side, and there's nothing for me to do here, okay. But if this happens, I'm offside, and if I have multiple risk, I can reduce risk in the trade, okay. So that's how you get closer to these candlesticks and what you're doing, okay. Then you wanna, once you forward test it in real time, right, you collected enough data, having no attachments to the trade, then you wanna demo trade it with discipline, okay, following exactly what you just forward tested. Right now you're actually entering the demo account, right, and you demo for a while until you build confidence, all right, and all the unanswered questions have been answered, right? Because there's gonna be unanswered questions that come up as you're forward testing, as you're demo trading, all right, and as you collect more data, all right, you'll be able to answer those questions. And once there's no more questions and answers, right, that come up, right, because I had to get to the point where, okay, this will come up, okay, so what I'm gonna do if this happens, what I'm going to do if I'm not tagged in a trade but it goes to my profit target, am I going to wait for that trade to come back, you know? All right, for me, if what I'm targeting in the trade gets hit, there's no point in me waiting for the trade to come back and tag me in. I'm done. That's why I closed, okay, the trade once. Hey, it allowed me 2 contracts. I'll begin at negative 1.5. Prices obviously hit my target. For me, I'm done, right? There's nothing for me to do here. But that's something that obviously I had to be in the market to find out, right? If what's gonna happen. I've collected their data to let me know that, hey, if this happens, how long am I gonna wait until price comes back to tag me in? Am I gonna keep that limit order on the chart for? Okay, I've collected data on that. That's a question that's come up as I've been curating these processes, okay? And I've had to go back in price and be like, okay, so let's look back at price, let's walk it forward, and then we adjust and we refine, okay, as we collect more data. So once you demo trade with discipline, all right, prove to yourself that you can stick to your model and follow it, and all the unanswered questions, all right, there's no more questions that pop up, all right, of like, oh, what if this happens, and oh, this happened, now I have nothing in place for this precision protocol. Obviously, there's always going to be stuff that come up, but once you get to the point where majority of your unanswered questions have been answered, all right, then, all right, then, and also once it's like, the attachment, you're void of all emotions in terms of when you get into a setup, you don't really care whether it's a hit or a miss, right? Whether it gives you money or takes you out, it's about the process for you, right? You don't feel no type of way to get back into the market and revenge trade and over trade, all right? Once you master yourself, right, and you can prove to yourself that you can trade with discipline and following your procedures and protocols, then, only then, are you ready to go live with confidence, okay? So this is the 8 steps that you need to take to build confidence in your trading edge. This is what I had to go through, okay? I had to go through all these, and you can't skip steps, by the way, okay? You cannot skip steps. There's no inefficiencies up here. $11.11. Oh, we finished right on time, isn't it? Right on the time. Oh. And that, ladies and gentlemen, is how you build confidence in your trading edge. We still would be in here, by the way, okay? Stop would be at 0.75, right? Bearing we had more contracts here, okay? Let's do a trade performance review and be done here. I'll be watching this going into lunch session, all right, depending on what side it gets taken right now. Okay, I'll be watching that. What I did well today is that I showed up, all right, got 1% better, gained experience, learned lessons that I'll take into my next trading day, next trading session. Very happy and pleased with my performance today. I showed up and I stuck to my procedures and protocols and didn't deviate from it. My protocols and procedures suggest that today is a sit still day, all right, and we do nothing because it's coming off a holiday, and that's exactly what I did. So I'm very happy and pleased with myself, all right. So not feeling no type of way about not being in any setup and just being content with, you know, following my procedures and protocols, right? Because that's what it's all about for me, really and truly. If I show up today, am I following my processes? Am I following my procedures and protocols? That's how I judge myself, and not by the outcome of any trades that I take, okay? Whether it's a win or a loss, all right? So, yeah, very happy and pleased with my performance. Where I first show up today, woke up at a decent time, got my morning routine in, arrived at the chart, did what I was supposed to do, showed up today, did my job, didn't deviate from it. So I don't think I fell short anywhere, really and truly. But obviously, if you think there's somewhere that I fell short, that I can't think of right now, let me know. Let me know in the comments, all right? Let me know however you can, all right? If I was just chatting a bunch of rubbish today and you didn't learn anything, also let me know, right? If I'm just a rumbler tumbler, let me know. Let me know. If you don't let me know, I won't know, and I'll just keep doing what I'm doing, right? It is what it is. How I can improve for next day, next trading session is just keep showing up, right? Keep seeking excellence in everything that I do. Don't let short-term adversity, losses, series of losses deter me, distract me from what I've got going on here, all right? Keep taking small steps in the right direction. Eventually, we'll get to our destination. Analyze data, analyze the data, all right, that we collect, because that's how you get that 1% better and you refine what you need to refine, okay? One thing that I am still slacking on is my journaling. It's been tough, but something needs to give here and something will give. I need to get back on my journaling journey, okay? Because journaling has been imperative in my growth, okay? And now that I'm here, it shouldn't be the one thing that I need to be slacking on, okay? I need to get back into my journaling. Ooh. The sunny side just dimmed real quickly right here. Just I got distracted. Squirrel. But yeah, other than that, a solid morning session for us here on the Trader Capital. All right, just tape reading and just talking. All right, and that's pretty much what it's been for us here. Yeah, solid day. Solid day. Let's wrap it up. Oh, trade breakdown. There was only one setup. One setup with multiple entries, right? One setup with multiple entries. Anyway, we come in, we establish our daily program as a buy program, okay? So we're looking to be a buyer of this market, right? Doesn't mean we can't sell, but understand that you'll be going against your daily program, okay? So we took time, all right? Time and price, all right? 950 macro, okay? We trade back below external liquidity, which was dealing range high. We take liquidity below it, swing with the displacement, market structure shift, all right? Multiple market structure shift back above. Right, once you have that, you always want to go with the highest market structure shift. This is what I meant by go with the highest market structure shift. Usually I like for one candle to be the one that takes it all, But obviously, as you can see here, there was multiple candles, but we failed to come into the market structure that we were anticipating price to come back down into. But once we took this high, okay, we should have adjusted our entry to this high, and obviously base the risk of this range here. Okay, that's fair, nothing wrong with that. Okay, so we missed that setup, and then we got a re-entry, all right, here to get back on. All right, give us a look at something to the next. Oh, actually we did have price here too, isn't it? But anyway, it was based on open range, AM session open range buy side. Okay, trade above it, we come down into inefficiency, right? This is how I use my inefficiencies for my continuation as well. Okay, trades into an inefficiency, swing, displacement, market structure shift back above external liquidity, entry right here. Okay, it's cleaner on the support in time frame because we do have another candle that comes back in and gives us the entry there. This would have given us just about negative 3.5. How many contracts? 5 contracts, so 2 of here, 2, 3, 4, 5, right there. Solid. After getting this and then this as a re-entry, or like, you know, another entry to, you know, jump on board to your targets. Cool. Anyway, that's really all the setups today, all right, that I would have engaged in, really and truly. That's been it. Solid morning, solid morning. I'm gonna be watching this. Yeah, but it doesn't work like that, but I'm gonna be watching it because I have noticed that as well. Interesting stuff. Okay, let's collect the data. Let's collect the data and let the data do the heavy lifting for us, you know. Anyway, we're gonna wrap up here. We'll see you on the next AM session tomorrow, kicking off at 9:15. I don't think there's any news tomorrow. Yep, it's not optimal day for us, but we'll be here collecting data anyway. All right, until then, catch you on the flip side. Let's wrap up. Before we wrap up, I want to leave you. There was a time that I would finish a trading session and still feel lost. Even on days I made money, I didn't really know why it worked. And on losing days, I had no system to fall back on. That's the difference between guessing and having a real edge. And here's the truth. Most traders only focus on entries, but consistency comes from the system behind the entry. So if you've been watching and thinking this makes sense, but I don't have the full system yet, that's exactly why I created the 10% to 1% club. That's where we go deeper into all 3 pillars: the full risk management, the money and mindset principles needed to join the 1% club, and the exact process to follow daily. If you're serious about becoming consistent, that is your next step. I used to think the goal was to win more trades, but the real goal is to become the type of trader who can perform no matter the outcome. Because once you have that, the results will follow. That's all for today, folks. Thank you for tuning in. I'll see you in the next AM session, kicking off at 9:15 a.m. Kickoff once again at 9:15 a.m. To be on time is to be late, okay? So make sure you show up early. As always, I'm the trader here, signing out. Good luck, good trading, happy bloody hunting. Remember, you only fail when you quit.